Your average American pension fund is only like 70% funded. The UK, we saw the near collapse, according to some experts, of nearly 90% of all the pension funds in England.
Rich Dad Poor Dad author Robert Kiyosaki and pension fraud whistleblower Ted Siedle blew the lid off the crisis in underfunded pension funds that is a massive problem all over the world. Kiyosaki and Siedle stand by their beliefs that many pensions around the world are vulnerable to collapse as they are underfunded and mismanaged. They go on to report how they believe the US government can protect US pensions if they act quickly. In this essential investing highlight, Kiyosaki and Siedle explain the impact of stock market crashes on pensions, what happened to UK pensions, the future of US pensions, and how to prevent pension failures.
So let me explain why England is so important is because the way they planned to pay for the pensions of the old guys like me was they would buy a bond. And they buy the bond and the bond would pay out. But as bond prices came down, the pension obligation did not stop. And so they had to borrow more or print more money to buy more bonds. So just by definition, when you borrow money to buy a bond, you're violating economics because generally a bond is due to savings. And savings come when you have income minus expenses, you have savings. But now they were borrowing money for fake bonds to pay off these pensions. And so when the Prime Minister of England, wasn't even Truss or Tuss, kissed the Queen died. That should have been a sign from God. I hate to laugh about all this, but you can't write this. I mean, you can't make this stuff up.
Well, one observer in the Wall Street Journal said that what happened this last week in England was provided a warning to governments everywhere of the dangers of the new economic era we are entering, which involves a toxic mix of politics, inflation, and higher interest rates.
And corruption.
So it's a very, very dangerous time, and governments are printing money. Inflation is raging, and these pensions are already underfunded. And so they're in danger already, and there's reason to believe that they're far worse off than they're saying because they're inflating the values of a lot of their investments, and they're increasing the use of leverage.
Right.
So leverage can be fatal, as you know, certainly in a pension context.
What is the condition of CalPERS, the California pension for public employees?
Well, CalPERS recently sold a bunch of its illiquid private equity holdings, which they said were worth, $1. They sold it in the market for 90 cents. That was a sign that whatever CalPERS is valuing their assets are, they're probably worth less. CalPERS is already severely underfunded, but the truth is it's probably another 10 to 15% underfunded than the numbers are showing.
Right. So I'll show this book again. It came out in 2013, Prophecy. As the stock market continues to crash because they keep raising interest rates, but the Chairman Powell of the Fed, markets keep crashing. It makes it harder for these pensions to meet they're based on 7% returns.
Well, the PBGC, if they knew what caused pensions to fail, they could stop pensions from failing, right? I mean, if you had the warning signs that here's a pension that is careening towards insolvency, then there's certain steps you could take to. You could say, we're going to watch these pensions. If they become endangered, we're going to, monitor them, and we're going to prosecute anybody who contributed to the demise of the pension fund. So that would have a prophylactic effect. People wouldn't go stealing money from pensions, at least not pensions that were near bankruptcy. And so but what goes on today is there's a feeding frenzy. If the pension fund is going to only be around a couple more years, then you get in there and you suck all the life out of it you can before it's gone. But this would have the opposite effect, where if a pension was careening towards insolvency, Wall Street would be on its best behavior, knowing that when this pension gets turned over to government, somebody's going to do a final accounting and see if anybody stole anything. So there are a lot of benefits that would come from investigating the causes of pension failures, but the federal government has has absolutely no interest in finding out.
Please like, subscribe, and hit the bell so you get immediate notification of tomorrow's video where crypto billionaire Michael Saylor breaks down the differences between Bitcoin's proof of work with Ethereum's proof of stake systems and why one system is miles above the other.
What would you say to all the millions of people with pensions?
Most of these pension schemes are severely underfunded for the benefit that's been promised.
Can I add one more thing? With the stock market crashing, how does it affect pensions?
You got two sides to a pension fund. One is your assets, and one is your liabilities. So if your assets fall in value and your liabilities don't, then you are even more severely underfunded.
Right.
Your average American pension fund is only like 70% funded.
Ted, what happened in England in September 2022?
Well, Robert, as we talked about in Who Stole My Pension, pensions globally, not just here in the U.S., are at risk at this time. And in this past week in the UK, we saw the near collapse, according to some experts, of nearly 90% of all the pension funds in England, holding like over $1 trillion, $1.5 trillion in assets. What happened was really a government policy-induced pension crisis. It was the government came out with a policy to reduce taxes in a highly inflationary environment, and so which resulted in adding tens of billions of pounds to the government debt, fueling greater inflation and causing bond prices to fall. And so it was a sort of cascading effect of this government action had a disastrous impact on the pensions. And then the government had to scramble the next day to reverse itself to prevent what would have been the collapse of all of these. And many people are saying that while exactly what happened in the UK probably will not happen in the United States, or what happened in UK will stay in UK, there are plenty of red flags or warnings about things that could happen in this country with our pension systems.
And what do you see possibly happening?
Well, we start with the fact is we often say on your program, Robert, is that the government agency backstopping 40 million Americans' pensions is itself bankrupt. So that's pretty bad. If your insurance company is bankrupt, then your insurance is worth nothing, right? Unless taxes are raised to replenish the agency's coffers, which they claim they don't use tax money. They just don't pay their bills, I guess. But so that's a big red flag. And increasingly, these pensions in the U.S. are moving into high risk, high cost, very secretive investments, private equity, hedge funds, venture funds. And so we know less about what's in these pensions today than we did 20 years ago. Even with the internet and all this transparency that's available, we know less today, and the risks are greater, and the returns have fallen as well.
What Ted is saying, these pension funds have to take greater and greater risk because the returns aren't there anymore. And was it you was telling me that many of the pensions now are in Bitcoin and crypto?
94% of American government pensions are in crypto.
I strongly recommend you click this video next, where Lynn Alden breaks down the seemingly unrelated factors that are all simultaneously contributing to the worst bond market crisis since World War II.